We love giving people new ideas and ways to make money, especially at this hour in the United States. Why are you betting so big on a German power company?
First of all, thanks so much for having me. So I spoke about E.ON today. It's a very simple story. It's really a large German utility, but it's in transition. Initially, this was a company that was unfortunately dealt a bad hand. They were producing power in Germany through nuclear sources, and the German government decided they no longer wanted nuclear power. So the company had to figure out what to do with a remainder of their business, and then also how to deal with the liabilities. This management team has engulfed on a multi-year transformation, which has been nothing short of spectacular, but is yet to be rewarded by the market. They've sold off a bunch of their legacy coal businesses. They cut a deal with the German government to deal with the nuclear waste. They spun out some of their other non-core assets. And they're currently in the process of engaging in a very innovative asset swap with one of their competitors in Germany, RWE. They've realized that because they trade at a significant discount to their peers and to the sum of the parts, they had to do something to highlight the value and to refocus the company. So the stock is trading today at about 7.5 times EBIT.
I was going to say, Aaron, 3 years ago, this was a €9 stock. Right now, it is a €9 stock. In other words, it's been just dead money, basically. What makes you so convinced that they're finally getting it right this time?
Sure. So they're in the last legs now, but over the past few years, they've been divesting of assets. So you notice the stock was at 9, it dropped as low as 6, and is now in the path towards a rebound and redemption. And the transaction that they recently announced with RWE is basically for them to refocus their business on just the regulated network assets, and RWE, their peer, is going to refocus their business on just the power assets. So we'll simplify the business and be able to dedicate the stock to much more focused investors that typically invest in regulated assets and pay a significant premium to E.ON's current multiple for those kinds of assets.
And I know you're very bullish. I got a little advance word on your presentation. You think the stock could double in 2 years? I mean, forget about E.ON.
Yes.
Any utility doubling,
Yes.
Aaron. I mean, utilities are, with all due respect, I mean, kind of boring, but they're supposed to be boring.
Yeah, it's a real transformation. So the stock trades at 7.5 times EBITDA today and less than 11 times earnings. They're transforming to a regulated utility. Regulated utilities, the public comps trade at 11 times EBITDA, and private market transactions happen closer to 15 times EBITDA. If E.ON were to trade like the other public regulated utilities at 11 times EBITDA and would be able to increase their leverage in line with the other peers and use that money for accretive things like buying back stock, yes, we do believe it could double over the next 2 years.
All right, we brought you on to talk about E.ON. One more thing before we go. What other ideas do you have at Furtry? You're a New York-based firm, but you invest all over the world. Do you think there's still a lot of other good opportunities across the world and in Europe particularly?
We're very excited about Japan, just not to move the focus, but we're very excited about Japan. We think that there is a multi-year story happening in Japan. This was a market that was trading at a significant discount to all their peers for years because of just a lot of very complicated businesses. As you know, companies in Japan have a lot of disparate assets that don't make sense being together. Historically, they haven't been run for the benefit of shareholders. But over the past few years, under the leadership of the Prime Minister, seeing like drastic changes in the way the companies approach international investors. They're listening to international investors. They're bringing on independent board members. They're focusing on divesting of their non-core assets. They're buying back stock. And we think that this is a market that's really ripe for a lot of opportunities.